Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 24th, Monday, new week. We are going to review the economic data that came out today, two small economic data related to national activity and manufacturing, and also we are going to review earnings and sector funds performance along with some news from Elon Musk and Apple. And also we are going to perform technical analysis on the Nasdaq that today it's got a pretty big move to the downside. So stay tuned because we are going to start with Chicago Fed national activity flat. But this is not the big one. The big one today was Dallas Fed manufacturing for April that came almost double lower than expected, minus 23. We were expecting minus 14. And this caused a little bit of turmoil in the markets because this shows that, okay, inflation is pressured and manufacturing is being impacted. But what about recession? Well, recession fears still increasing. Apart from that, remember, this week is one of the most important weeks regarding earnings. Look at this. Today, we are going to review Coca-Cola, Philips, and Credit Suisse earnings, along with First Republic Bank that is going to report earnings after close. Tomorrow, before market open, McDonald's and PepsiCo for consumer discretionary, and the most important ones after the close, Microsoft, Alphabet, and Visa. These are going to be huge. Wednesday, after the close, Meta, Roku are going to be really important. And on Thursday, the two big ones. Before market open, MasterCard along with Visa are going to show signs of consumer spending. Who knows? But after the close, Amazon and Intel along with Snap Inc. and Pinterest. So this week is actually going to be huge in terms of earnings. Let's start with Coca-Cola. Coca-Cola beat both earnings and revenue, showing high demand, even though they hiked prices. So this is good for consumer discretionary. One of the things that Fed is watching is less spending and more consumption. In more consumption context. So let's take a look at the chart of basically Coca-Cola. Coca-Cola was a little bit higher of, I think it was like 3 or 4%. It was 2%, sorry. 2% and now still in the green, but feeling the pressure that maybe we are too high and these are good earnings, but the outlook may be lower due to demand destruction that is being prepared by the Fed. We will have to see. Coca-Cola out of the goods. Philips traded 14% higher, but this is not important. But still, good earnings beat from Philips. Credit Suisse posted earnings and revealed that it suffered a net assets outflow of 61 billion. 61 billion. I mean, this is not what it was expected, but I think it's one of the things that it is not good to see that your liquidity, your deposits are basically gone, and this may be worse than expected. I really doubt this is going to basically rebuild right now all this gap down until UBS is planned to fully acquire, fully absorb throughout all this year the FRC. So until then, banks are going to still be in the focus, but more than that, tech. We jumped from banks earnings to tech. And this week is going to be brutal regarding that. The Credit Suisse lagged out outflows of more than 62.8 billion, as we were mentioning. So the domestic rival UBS basically absorbed, but this absorption, this acquisition is not going to end. It's going to take all 2023 to finish. So until then, deposits continue flowing out. And this is really bad for stakeholders and for the overall health of the bank system overall. What else? News. We are done with earnings for today. Tomorrow we will be analyzing Microsoft and Alphabet, but for now, let's recap that Coca-Cola reported good earnings. Consumer discretionary was really on the focus today because, as you can see, this is the sector funds performance. Look at this. In the last 5 days, XLP was defensive sector, staples was 1.50%. And the reason why is due to another big one stock. Procter & Gamble basically reported big earnings and jumped since the earnings 2% and until today 4% in the green. So consumer discretionary is really nice to see it up, but staples are starting to show up, also utilities, also healthcare. And if you have been following this channel, you know that these three sectors are defensive sectors, and being this up beating technology that is down here minus 2% almost, and communications minus 2.57, it's really showing signs of defensiveness from Wall Street. So take that into account, and also the fact that we are still at 90% of probability for 25 basis points, and we are going to review later in the charts that bonds market are still pricing in one interest rate cut in November or December. But for now, we are going to reach 5.25 terminal rates, and then we'll have to see. Fed is saying that they don't want to cut this year, but markets are still betting otherwise against that. So Elon Musk, well, basically an open letter to Tesla due to the admonish the company's board of directors to rein in overcommitted CEO Elon Musk. This is really causing a lot of, I think, choppy and weakness on Tesla, not only due to this open letter against Elon Musk actions on Tesla, but also for the SpaceX explosion. I don't know. It's a lot of pressure to the downside for Tesla, and we are going to review later in the charts that really Tesla is having a rough day today, minus 3% for now. And the last news, Apple's VR headset will reportedly run hundreds of thousands of iPad apps. It's expected to be a cost around $3,000, and looks like all the bookings, all the pre-box reservations are done. So we will see if the demand is there. I don't think this is a really interesting price for the regular consumer, but we'll have to see about that. So that's that for the market. In terms of news, let's go and let's start with technical analysis on the Nasdaq. Let's start with the 30-minute chart. Because as you can see, I was watching this level 13,100 for resistance and 13,000 for support. And if we check the 1-minute chart, we started going parabolic until this level. At this level, on the 30-minute chart, we also had this descending trend line. This descending trend line that was around these levels. And look at this. The break was 13,114 and we reached 13,130. So I started looking for shorts around here. Once we crossed below 13,106, that's the 30-minute resistance that we failed. We started coiling. I have started here short, and I'm waiting for this range to happen. And this was really the key. Big push after the Dallas Manufacturing Index at 10:30. we got a nice move, and I covered around, I think it was 20 something, 28 and 26, so around here. A lot of profit left on the table, but it doesn't matter. This was a really nice setup with, I think it was a very manageable, not this one, is this one, very manageable short with the first target at low of day. That was a 2.3 risk reward ratio, and the ad also, I think that was like 2 or something like that. It was like on this pivot, this ad, it was like 2.45. So two really nice shorts, and we are still seeing weakness. As you can see, we are breaking down this support, and look at this. This is prior Friday's low and last week low. Last week low. We are at these levels. I think buyers will recommit down here. So it is expected that we are going to see a nice bounce. So let's see what happens, but I think that for now, shorts are going to be in control unless we start reclaiming this pivot around here, 13,031 above point of control. Let's see if there's a rotation. Point of control was up here. It flipped to the downside and we continue lower. This is not the same kind of momentum that we got in this, but I think there's a lot of shorts today. So manage your expectations if you are trying to find a bottom and try to go long of these lows. What else? As always, let's take a look to gold. Gold looks decent, but it's still 15%, 0.15% green on the day. And it's not a really big move after Friday's sell-off. But I mean, gold is quite sensitive to higher interest rates. We are above 90% probability for a hike of 25 basis points. So this bounce, maybe it's shorts covering or something like that. But in terms of the 30-minute chart, I mean, the market structure is still to the downside. There's not a big range today. So being in the green, it doesn't mean anything. The same as crude oil. Crude oil was trying to fill the gap. It found buyers and is now bouncing. But after this sell-off, I think rallies are going to be met by sell demand around this 200 moving average on the daily. So being in the green, either also as gold, it doesn't mean that there's a divergence with the overall market, because we came from a lot of red, and I mean, a little bit of green day is expected, so bounce is normal. Dollar, though, we are still finding a lot of weakness. So look at this. We have this double wedge, double trend line, this 4-hour time frame wedge broke to the downside, and I expect this move to at least reach 100. I don't know about you guys, but I think dollar is being pressured by other microeconomic and geopolitical pressures and issues. It's not only about US economy, it's also about dollar being the king in the forex exchanges. So be careful if you are trading cash, because this looks like really, really weak. Yields are in the red. I think economy is still pricing in a little bit of recession. We are still above the breakout point in both 2-year and 10-year yield. And the interest rate futures are quite interesting, because we were mentioning before that bonds market are pricing in at 25 basis points around November or December. So they are still in the red. They still think that Fed is going to raise, hold, and in 2 to 3 months, they are going to pivot and start cutting at the end of the year. I don't agree with that, the same as I'm not agreeing since maybe early March. So be careful with your expectations, because once the market realizes that it is not going to cut any rates this year, I mean, the overall market is going to really feel the pressure, and there's a lot of potential to the downside. So be careful with that. In terms of forecast, well, let me show you. Tesla is starting to feel this gap. Gap entry is 160 and gap fill is around 146. So there's still a lot of potential to the downside. We left behind this gap down. We didn't even enter today, and we just continue selling off. Elon Musk news, Tesla earnings, and all that. So expect at least to retest some kind of gap down here. This is a huge gap that Tesla left behind. So be careful with your positions if you are trying to take a swing. I think 150, 146 would be a nice way. I'm not having Tesla in my portfolio right now, so it's an interesting level. 146, I think it's an interesting level. Apple, not super weak, 0.52, but Microsoft 2.36. Look at this, it's starting to pinch that gap left behind at end of March. Tesla with the 3 in the red, and Amazon. Let me focus a little bit on Amazon because Amazon was having a really nice trend, and they just fell off a cliff. If you can see this bull trap entering the gap, rejecting it, I mean, this is really nasty. If you don't have a really solid risk management in place, you can be, look at this move. And since top to bottom is just really big, minus 3.76, minus 3.76. So Amazon is being destroyed. XLY minus 0.80. I mean, this is showing demand destruction. Remember that Tesla, Apple, Amazon, all those, even though Coca-Cola reported good earnings, all those affect to XLY as a whole, and it shows that consumer discretionary is not strong. So rotating to defensive, Wall Street is showing signs of demand destruction, and that's not good for the economy. So the bearish sentiment is still there. We are still rotating at this level of last week high. So be careful because this is quite pivotal. As I was saying last week low, I was saying I incorporated a fib retracement. The golden pocket 0.66, it's really concerning because it's below the 200. So if we start seeing signs of accepting lower value below 13,000, we might see a move towards the 200 and maybe the golden pocket on the fib retracement. There's a lot of wicks down here, so I expect buyers to recommit later before flashing down here, but you have to assess all kind of scenarios. So, and this is really possible if things start going south on the economy and earnings are bad. Remember, this week is super important. Don't be naive and think that this thing is super strong and cannot sell off. Anything can happen in this market. So be careful with that. We are still seeing, as long as we saw that slow grind to the upside, everything was nice, bulls were super happy, but today is the other way around. Today is just slowly bleeding out. I mean, this was a nice trade, but don't get too confident because we already saw a couple of weeks ago what kind of big reversals Nasdaq and overall markets can do. So if you are short, just enjoy your day, take your profits, and call it a day. That's my recommendation. We don't have to be greedy. Bears are struggling to take profits. Trust me, I've been there, but today is just a very nice day for bears. So if you were short, just take profits. And if you were long, I think you have to really be patient to try to find a nice curl into the afternoon. That would be your best bet. If not, just call it a day. Take your losses and be disciplined. That's really, really important. So that's all from my side. As always, thank you for your time. If you find this video useful, please remember to click the like button and subscribe to the channel to support the channel and to really be aware of when I upload new videos. And remember that I upload new videos every single day for market forecast, market updates, and market recaps. I also upload a couple of shorts this weekend. Please take a look. Those are really, really good and will provide you with a lot of information, useful insight from my experience. So if you didn't check them out, please do so. And thank you for supporting the channel. I've been seeing a lot of subscribers lately. So thank you for staying here with me and supporting me in this endeavor. And I really hope this information, these daily markets analysis are helpful for you. I think so. I'm really enjoying this and I'm also trading. So my information can be yours. My way of understanding the market is the same way as I day trade them. So take advantage of that. Thank you for subscribing and I will keep them coming. So thank you as always. But remember that the trading day is not over yet. We are starting to reach noon, lunch hour, and into the afternoon. Anything can happen, but don't be careful. Just be careful. It's Monday and you don't want to just dig a huge hole on Mondays. Discipline and risk management, remember, are key for success. Stay safe, everyone, and see you tomorrow.